Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 2nd of September, 2016. Hope you had a good week of trading. It was a good week for equities, generally speaking, with the S&P gaining 0.5%. Russell 2000 and the semiconductors were up over 1%, and the biotechs continue to be dogs, down 1.6%, and oil dropped pretty good this week as well. Let's take a look at the charts and make some sense of it. The S&P 500 remains above that rising 50-day moving average and this trend line that kind of hit off the peaks in April and then June, and then that's where it found support right over here back in early August. So looking now to a 30-minute time frame, we've been in this big choppy range, and I'm going to drill down just a little bit further to a 15-minute time frame. For the week, we did close above the volume weighted average price, so this was on Monday, and its VWAP was right in here with that 5-day moving average as well, and also the 2-day volume weighted average price from where that weakness began on Thursday. On Thursday, midday, I had mentioned to subscribers that this was most likely the low for the move, that we had undercut this prior low right over in here, and oftentimes that's where stops reside and where uneducated short sellers get involved. Certainly, we did get back above that, and today it was really helped with this gap higher to get back above and hold above that 5-day moving average. This was what we were looking for, that we wanted to see hold today on a closing basis, which it did, and we were closed right near that volume weighted average price. So when we back it up again, one, it was a positive week for equities, and back to the S&P 500, we've still got a big mess here on the intermediate term time frame. Now, we certainly, you could look at it as a positive that we came down and shook out some sellers, but you could also say, well, was that negative that we shook out the buyers up there? This market is just kind of absorbing these gains that it's had through time, and the whole sell in May and go away turned out to be a bust this year. Sell in May and come back in September to buy was, again, we look at that seasonality and are interested in historical tendencies, but only price pays. So you trade what you're seeing, not what some cute little phrase says. From our Brexit lows, we're still well above that volume weighted average price, which is down near the 50-day moving average. And generally speaking, we're positive environment for equities. The rising 50-day moving average tells us that we still give the benefit of the doubt to the buyers on sell-offs, that we're not looking for a top in this market. Instead, we turn to the sidelines as things get ugly in the market and focus on individual stocks. Back up above this level next week will be interesting. If we can get back above and hold above 219, perhaps this market can continue to move on to new all-time highs. I'd really like to see that this area would hold as support somewhere in this midpoint of the range, 217.50 to 217.75. As long as it does that, we're going to give the benefit of the doubt to the buyers, because the longer term trend is higher, realizing that we have the potential for resistance up between 219 and 219.50. But with the primary trend higher, again, the buyers get the benefit of the doubt. The Nasdaq, as we said, gained a little bit of ground here this week, about 1/3 of a percentage point. And looking at the 30-minute time frame, we had a couple important things happen here. We broke below this prior low and shook out people. So that which doesn't kill it makes it stronger, but we're back into the midpoint of the range, really, that we've been involved in for over the last month. We did break this downtrend line. We are above a rising 5-day moving average. We're above the volume weighted average price from this peak over here. So again, we are in decent shape in the Nasdaq. Next week, I think you continue to give the benefit of the doubt to the buyers, as long as we remain above 116.5 to 116.75. If we remain above that level, then we again give the benefit of the doubt to the buyers and would not be looking for a deeper pullback. Below that level, you get more cautious, and we'll see again, how does it handle the 117.75 to 118 level? Will it in fact slice through? Is this distribution before decline? It's seeming more and more like it is not, that the buyers are continuing to step up on these pullbacks and absorb supply that comes in, which, given that we're in a primary uptrend, gives us a reason to think that this market will in fact continue to move higher. Now, you've got all this noise coming up from the election, of course, that will continue to make things difficult, but as long as you're focused on the right stocks and are trading with good risk management, the path of least resistance, it's easier to make money on the long side than it is the short side. And definitely we saw that in Alpha Trends. We had a couple shorts this week that really, turned into small losers, just, annoying little losers, but some great winning stocks too. The Russell 2000 back above its rising 5-day moving average, also, right up into this prior little band of resistance that we've seen for the last 2.5, 3 weeks. So on the daily time frame, still in a clear uptrend, higher highs and higher lows, just clearly that is stair stepping higher, and with all the moving averages rising, we are still in an uptrend. There is no reason to be looking for shorts for anything, I think, more than day trades. 123 and a quarter to 123.50. That's the level we want to see hold next week. If it continues to do that, I think you're going to see this market break higher from here and continue into new highs for 2016. And it seems like eventually, perhaps even this year, we could be up near the all-time highs in the Russell 2000 that we're seeing last year. So semiconductors, again, this is just the strong group out there. It's only closed once below its 10-day moving average since crossing back above it here in early July. And a lot of people are still somehow in business and looking for a place to short this market. They've been trying to short it. So if you're shorting it and you're still in the game, good for you for good risk management. But also, be aware though, there's no point in shorting a market again that shows these higher highs and higher lows with a rising 5-day moving average. There was just no advantage whatsoever to be on the short side. So until that changes, we're simply not going to look for the short opportunities in here. The biotechs continued a little bit weaker here this week, and right down to that rising 50-day moving average. You can also take a look at the volume weighted average price from the lows back in June is right in this area as well. So it stands to reason that we would continue to find some support in here, and that this area would not break lower. If, however, it does, then who knows? This thing could see another nastier sell-off, and we've got the volume weighted average price year to date, which would become the next likely area that it would test if it does that. Looking to a 30-minute time frame, you can see that we are below the declining 5-day moving average. We had a slight shakeout in here this week, and this was, as I've told subscribers, I think that this is the level, if you're looking for a reversal back higher, that this is the level that you protect yourself against underneath that undercut right here. But it's still too early to get involved on the long side. If perhaps it were to do something more along the lines of something like this, and then pull back, create a higher low, and then break beyond a little bit of resistance right here, then perhaps it's a decent risk reward for a trade. But that I would be expecting, this is a very likely area where resistance would be found. So the question would be, is if you were to buy up here with your risk under here, would that amount of risk be enough to justify the potential for a move up to here? We don't know if this is resistance. People who will tell you this is resistance, they don't know what they're talking about. There is zero evidence because we haven't tested it. It's possible it runs up there and just continues to go right through it. It's a potential level of resistance, an area we want to be aware of. And if you do get long, then maybe take a little bit off and raise your stops in that area is the proper way to deal with it. Apple had a little bit of a shakeout recently, as we know. It's back above the volume weighted average price since their last earnings report. It's back above the 5-day moving average, and right now it's against the volume weighted average price from the peak of this most recent move. So Apple is clearly showing signs of improvement. I think that next week this is really the key level for it to get back above and hold above. The ideal scenario is that it would pull back once more down towards this 5-day moving average, then break higher, and you could put your stop somewhere somewhere under here. We don't want to buy it right away on Monday because it's just had this afternoon run. It'd be better to see a pullback, create a higher low, and then buy strength with a stop somewhere maybe underneath this level. Alibaba was a great stock this week. It continues to behave real well since reporting earnings. And here's the volume weighted average price since the earnings report. We bought it this week as it got back above that volume weighted average price. Still long a little bit of it, but this was, this stock has been very good with its volume weighted average price levels. We mentioned, about a month ago, the volume weighted average price from the IPO was breaking, and that has been a good area. I'll also say that Twitter is starting to look a little bit better as well. Now, longer term, obviously, it's still in a primary downtrend. We still have a declining 200-day moving average, and it tells me that at best we're in stage one accumulation, but it's becoming more likely that it is accumulation and not just some sideways action. And the reasons I say that are, of course, based on the price action of the stock. Since the most recent earnings report, which when the stock gapped down and recovered, we came down and went just below that this week, trapped some shorts under there, and then as the stock made the higher high above the flat to rising 5-day moving average here, the buyers regained control. Furthermore, the volume weighted average price from the peak, you can see, acted as support this week, and that is a good sign. I think that as long as, for a longer term investment, I would have my stop underneath this pullback low, and from a swing trade perspective, just under $19 a share.